Good evening, ladies and gentlemen. It's 10 p.m. on Wednesday, July 26, 2017. Today at Dividend Stock Talk, we're going to be talking about dividends and dividend companies that are actually paying a dividend that we can collect and make some weekly and monthly cash flow. That's what we're here for, weekly and monthly cash flow. So let's just jump on in, see what's cooking. All right, first off, we want to go to our dividend investing trading account. Now, we manage several different accounts. Some do with dividend capturing, some do dividends on steroids, some do with dividend investing, and not the very last one does with dividend investing with options. We're only going to be concentrating on the dividend capturing and the option side, because one is very safe where one is very risky. Now, the other two strategies are somewhere in the middle, but these two we're just going to stick to give you an idea of what we're looking at. First one we're looking at is our dividend is our dividend capturing. Basically, we're looking at buying a dividend stock just before the EX date, collecting the dividend, and then reselling for a small profit. Does it work all the time? No, it doesn't work all the time. In fact, let's go take a look and see how well it worked this year. Now, our account statement. Here we go. These are all the positions we have, all the trades that we have done this year. And that's not a whole heck of a lot. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, and 34. Only 34 positions we've done this year. Now, let's go for profit and loss. Okay. Now, we have the three positions that we're in: Macy's, Tanger Factories, and Discover Financial. Those are the ones... Those are the ones that we're into at the moment. As you can see, we're losing on all three. 14,000 on Macy's. I hate when that happens. Tanger Factory Outlets. I don't even know what these people do. We're down 6,000 or 6,800 on them. And Discover Financial. We're down, what, 1,800? Not a big deal. But all the other positions, we have 1, 2, 3, 4, 5 break even. All right, that we didn't lose any money, we didn't make any money. But the rest of them are all profitable. The lowest profit we made was $62 on Deluxe Corporation. Then Halliburton, we made $96. That's not a lot. But the most we ever made was a Dollar General, which we made $5,500. So we profited off of each one, except for the three that we're holding. Now, we're doing a no-lose trading strategy. So no matter what we do, we are not going to lose any money. So we're just going to hold on to it and collect the dividends, and then hopefully at the end of the year, we'll be profitable. At this moment in time, we have, I think we're up at 6 point something percent. All right. 6.3. So we had $6,300 off of a $100,000 account. So that's 6.3% return so far. Now, let's quickly look at the positions that we're in. DFS started out the year right around 56, between 55 and 59. Traded that way for about 4 months. And then right around election time, actually on election day, she jumps from 56 and jumps all the way to make a high of 74 a couple months later. Okay, just because Donny Boy gets elected, everything goes crazy. Okay, so she jumped up to 74. That was the beginning of the year, January. Okay, she's traded sideways for a little bit. Came back down to 67, traded sideways for about a month, and then she dropped down to the 59, 60 area. Now she's at 63 at the moment. And we are into DFS. at 67.16, which we're not that far away. Where is it? 67. So we're looking to sell this thing for 67.18, which is, because we already collected our dividend on it, which is only 8 shares, which was not a whole heck of a lot of money, but hey, money's money. So we're not too far away from that, because we're at 63 now. It's going to go up to 67. That's not too far away. However, Macy's, look at this. Our target price is $33.10, and she's at $23.10. So we're looking for a $10 increase before we're out of Macy's. Now, $10 from a $23 stock, that's close to a 50% increase. I don't see that happening anytime soon. All right. Talking about Macy's, let's take a quick look at Macy's. Macy's, here we go. Macy's started the year out at 36. Okay, she traded between 32 and 40 for about, what is that, 4 months. She hits a high of 45. Okay, so the high for the year is 45, and right now she's at 23. That's almost 50% decrease from the high of the year. It wouldn't make me too happy. Now, I didn't get it at 45. I ended up getting here at the 33, right around the $33 area. All right, so from the high, she drops to a trading range of 30, and she trades for that way for 5 months. And then in May, the second week of May, she drops from 29 down to the 23 area, where she's been trading for the last few months in the $23 area. Okay, today was, almost looks like a doji, but I can't really say. She opened at 23.55, and she closed at 23.54. So it's not quite a doji, but it's pretty close. It's where they open and close at the same price. But it's pretty close. Anyway, so that's Macy's. We collected 42 extra shares. So right now we have 1,642 shares. Now, if you guys have been following me for a while, you know I only buy in 100 increments. So we started out with 1,600 shares of Macy's. We collected the dividends twice, which was 21 shares worth. And so we ended up, rather than taking the cash, we took the shares. So we're at 1,642 shares. We're down 14,000 bucks. But we're not going to get rid of it because, you know, Macy's is Macy's, and they've been around for over 100 years, and we're probably going to see a retracement eventually. How many more dividends are we going to collect before this thing hits our target price? Don't know. Don't really care. Like I say, we're you know, earning money as we go. So let's find out where else we are. SKT. Let's quickly take a look at them. SKT. Now, SKT starts out the year at 41. She trades that way for about a month and a half, and slowly drops down to a trading range of 34. Trades this way for 1, 2, 3, 4, 5, 6, 7 months before dropping all the way down to the 26, 27 area where she is now. Now, we got SKT at 32.88. Okay, and we're looking to get rid of it at 32.90. Right now it's at 27.33, which is not that far off. It's only $5 off. So $5 is a 20%. I don't know how long it's going to take it to go up 20%. But we collected dividends on this one too. 13. How many times did we get dividends in this? All right, we only got 14 dividends. That was the end of April, May, June. Wait a minute, January, February, March, April. So, whoa, we should be collecting dividends on that this month. No, wait a minute, this month coming up. All right. Anyway, we will check into that a little bit later, find out. We'll end up picking up some more shares or collecting the dividend check. Who knows? So we do have a little bit of money that we can invest with this account because all our money is not tied up. So we have, I don't even know how much we have. Let me show you how I find out how much we got. I usually go to trade, put in any old stock symbol. I like to throw an IBM. And I just hit buy, and I'm going to do 5,000 shares. I'm not going to actually get this. What's going to happen is they're going to tell me it's going to cost me $363,000, which I don't have. But watch what happens. Watch right up in this area right here. So as soon as I click send, okay, It's rejected because I don't have enough money, but it tells me exactly how much I have to trade. So I don't know if you want to call that cheating because I really don't know where to look to find out exactly how much I have, but I have 43,000, which means I can make 2 trades, each right around 21,000 bucks. So let's do that and find out who we have. To do that, I'm going to jump over to this account, go to the Market Watch. We're in the 26th of July, so we want to go 10 days ahead. Okay, so 10 days from today, 5 days will be the 2nd of August, and 10 days would be the 9th of August. So we have 26 companies that are paying out their dividend or going EX on that date. Okay, the EX date is the 9th, which means the dividend record date or the date of record is the 11th, which would be Friday. So that would mean Monday, the 14th, would be actually collecting the dividend if we hold it that long. But what I'm going to do is I'm going to quickly take a look at some of these and find out which one I want to do, and I am going to do that by who has weekly options. All right, so there's 4 companies that have weekly options on that day, and we're not going to look at Sherwin-Williams, this one right here, because it's only an 8-cent dividend. It's really not worth my time and effort. Okay, we have ExxonMobil, which is tomorrow, so we'll take a look at ExxonMobil tomorrow. International Paper we'll look at tomorrow also. IBM was today. We could take a look at IBM today, see what that did. But anyway, just for the fun of it, let's see who we're going to look at. We have BA, which is Boeing, okay. Walmart, we all know that. Charles Schwab. And GlaxoSmithKline. Ooh, I remember those. GlaxoSmithKline, that's a nice company too. So let's take a look at these 4 and find out what we're going to buy today. So let's go. BA, which is Boeing. Ooh, 230. Oh, look at that. I was talking about this one yesterday. I don't know if you guys remember, but I was talking about doing Boeing yesterday morning. I mean last night. Boeing came on the list, and we were going to do that this morning. But I decided that I don't like doing $200 stocks. And had I done that this morning, look at what would have happened. This, come on. How did that happen? My screen went berserk. All right. Okay, here we are. Today, this thing gaps up from 212, and she opens up at 223. That's a nice little move. Okay, she opens up at 223, makes a high of 233. We would have been in and out with extra change. Thank you very much. But no, I didn't do it. Reason why I didn't do it, I don't like $200 stocks. It limits my playing time. And also what the chart told me. Seasonality chart told me that she goes down this time of year. Okay, is that definite? No, it's not definite. But usually, over the last 10 years, she has a tendency to mellow out this time of year. See the red line? She's going towards the downside right there. So do I want to get into that one? No. That's the reason why I didn't buy Boeing. Okay, so I'm not going to do Boeing today. And let me tell you the reason why. Well, here's one of the reasons why we're here. This is where Boeing is right now, okay, 233. Okay, the crosshairs cross right there between the red line and the blue line. That's where they come together. What does that red line look like it's going to do? It looks like it's going to go down. It's a tiny bit and slowly continue going down. Do I want to do that? No, I don't. That's one of the reasons why. Second reason why I don't want to do this is because, look, if we look at the 1-year chart, this is the 1-year chart. Like 1 year ago today is 7/26/2016, and now we're at 7/25/2017. Okay, that's all 1 year. This thing's went sideways for a little bit. She started out the year at 135, Went sideways for a bit, made a low of 126. And then from 126, she did absolutely nothing but go up, 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 up. And then today, she gaps up. So right at this moment in time, Boeing is at an all-time high for the year. Do I really want to be at all-time high looking to go higher? No, I don't. Could it go higher? Yes, it can. It's exactly what happened today. Yesterday was an all-time high. Okay, she opened up at 213 yesterday and she closed at 212. Okay, and then that was the high of the year yesterday. Today, new high of the year. Do I want to do that again tomorrow and Friday? No, I don't. So we're going to pass on Boeing. All right, GSX, GlaxoSmithKline. Let's see what they look like. GSX. Oh, come on. You really can't do that to me. And it is doing it to me. Look, going slow, doing nothing. I got nothing to look at. Okay, so while that's loading, let me go to trade GSX. GSX. GSX has no options and has no pricing. Huh. I can't do squat. How embarrassing is that, doing a live trade? And this is what happens when you do something live. If there's nothing available, there's nothing available. GSX doesn't have any options. Do I really want to do that? I don't know. All right. Charles Schwab. Do we want to take a look at Charles Schwab? GSK. GSK. That's why I typed it in. That's funny. All right. She starts out the year around 45, and then she just drops and drops, and she takes about 5 months to drop to an all-time low of 37. Okay, from 37, she bounces up, and she goes back to a trading range of somewhere between 41 and 43. And at this moment in time, she settled in at 40.85. The nice thing I like about GSK is in 10 days, they're paying out their dividend, and they're paying almost 50 cents per share. You're buying it at $40 or $41, and she's paying a 49-cent dividend, which is pretty good. That's like a 1%. And if you're on margin, that's 2%. So let's take a look at what the numbers look like. GSK. GSK. Okay, we do have weekly options available. Now, 2 days, what is it offering us for 2 days? Vertical. Okay. And it's at 40. That's not looking good. And that's not looking good. Okay, so the 40, 50, the $40 and the $40.50, that spread is going for 49 cents. Do I really want to pay 49 cents for a 50 cent profit? No, it only leaves me 1 cent. Where's my incentive? Get it? What, incentive, 1 cent, incentive. That's funny. That's lame. Anyway, so GSK, the numbers don't look good. Okay, the chart looks good. Let's see how the seasonality looks. Well, the seasonality, if you really want to think about it, okay, we're here, okay, which is a low point, which is almost right on the money for the seasonality. But look where she should be going in the next few days, up. So that's good. So she got the dividend coming up, which is good. She got the seasonality, which looks good also. The software, we should throw it into the software and see what the software says, but we're not going to do that today. We're just going to go through some of the exercises if you didn't have the software available. So she should be going up in the next few days, which means we should be profitable. Now, get back to my chart. Standard chart. There we go. I like gap downs. Okay, usually on a good stock, what usually has see, this is basically a sideways going stock. Right, she dropped down, hit the low. It's been going up, 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 and lately for the last couple of months, basically going sideways. Not really any big advances and not really any big setbacks. But as you can see, it's just not profitable. So we're going to pass on this one, and we're going to jump on over and take a look at Charles Schwab, SCHW. SCHW. Get rid of this. Okay. Charles Schwab's at $42.78 at the moment. She started out the year right around 28 bucks. Quickly jumped up to a $30 trading range. Traded there for a few months. Right around election time, she goes from 31 and jumps on up to the 41 area, which is a 30% increase. Yeah, 30% increase. Just because the new president's in, and she was trading 1, 2, 3, 4, 5, 6, about 7 months in that area, and she slowly jumped up to the $42 area, which is where she's at now. Now you notice she's not at the high and she's not at the low. She's kind of somewhere in the middle, which is what we like. Now let's see what the seasonality looks like. All right. The blue line represents what she's doing now. This represents 10 years worth of data, one year on top of another. So let's zoom in this little space here. Here's where we are right now. The cross here's right there, and that's a clear upward sideways structure. So it's slow. It's a very slight upward going sideways, which I like that. So that's good. Right. So you got the 1 year chart looks good. The seasonality chart looks good. It has dividend coming up in 10 days. The software comes out good. And let's see what they're offering us for a dividend play. So it's $42.78, which would be $42.50, which would be right here. And that would be 40 cents. Okay, so that means if I buy this position, it's going to cost me 40 cents. Right? Okay, so it's costing me 40 cents, and the most I can make is 50 cents on that. So let's quickly find out what kind of return that would be. Okay, so the most I can make is $500, and it's going to cost me $2,000. That's 25%. Okay? 25% for 2 days. Okay, because tomorrow's Thursday and then Friday. This thing expires on Friday. So as long as this stock stays above $42.50, which is right here on this marker right here, as long as it stays above that, I'll make 25%. Okay? Now, nice thing I like about positions like this, if the stock goes up, I make 25%. If the stock stays where it is, doesn't move at all, I make 25%. If the stock goes down, she can go down all the way to 42.40, which is somewhere around here. That's my break even. Once it goes below 42.40, that's when I start losing money. Do I want that to happen? No. So, if it goes up, I make money. Stays the same, I make money, and she can even go down a little bit and I still make money. Okay, so this is a good play. So I think I'm going to buy some of this in the other account because there's no money in this account. So let's go to the other account. And who were we just looking at? We were looking at Sherwin-Williams. Yeah, SCHW. SCHW. Alrighty, and we want to buy custom. Alright, now how many did we want to buy? We said we had $43,000 to play with, so let's bring out the calculator. Calculator. Alright, 43,000. And how much was that stock going for? Let's go for 42.50. Divide 42.5. That can't be right. 23? $43,000 divide 42. 42.5. All right, that's a little bit better. 1,000 shares. All right, so we're looking at 1,000 shares. 1,000 shares. 1,000 shares. Okay, what it is you're looking at, I'm filling it. All right, when I right-click on the ask, this drop-down window opens up, and it gives me a bunch of options that I can do. I can buy, I can sell, I can buy custom, sell custom, create alert, blah, 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 all that stuff. Now, I want to buy custom. Now, this allows me to set up a saved trade that allows me to just right-click on any one of these, okay, and it automatically populates my order. Okay, I'm buying 1,000 shares, so let's 1,000 shares. I'm also selling 1,000 shares. Okay, so I'm buying 1,000 shares tomorrow morning at the market. So as soon as the stock market opens tomorrow morning at 9:30, at 9:31, I should get filled for 1,000 shares. Now, what happens instantaneously, as soon as I buy those, I automatically put in my sell order. I don't do it, the computer does it for me. And that's one of the reasons why I use Thinkorswim. Because there aren't very many, if any, trading platforms that allows me to do this. Now, there's a few out there, but I have to manually put the numbers in. That means I put the buy order in, so whatever the market fills at, then it tells me, it sends me an email, tells me how much I got filled at. Then I have to go back in and create the sell order. Here, the computer does it for me, automatically does the sell order, triggered by the purchase of that order. And then it adds what I'm looking for, 2.5% increase, and then it sells it as a limit order, good till cancel. Okay, so everything's done instantaneously. So I click on confirm. What happens? Order 1, I buy 1,000 shares of Schwab at the market to open. Okay, and order number 2 is sell 1,000 Schwab, triggered plus 2.5% limit order, good to cancel, triggered by order number 1. Okay, so it sounds a little confusing. It's a little confusing to set up, but once you set it up, everything is easy after that. Now, I do have a video that shows you how to do that in the members area over at the 10-Minute Trader. Oh, so yes, I am buying that. So I'm going to click go. And there you go. Now I got $21,000 left, so I can do another trade. So let's go back and find out who's next. Okay, let's cancel this one. Cancel this. And who else are we looking at? All right, so we're not doing Boeing because the numbers didn't work on Boeing. GSK, the numbers didn't work on GSK. We bought Sherwin-Williams. And now let's take a quick look at Wally World, Walmart. WMT, Walmart. Trade. WMT. There we go. All right, Walmart starts the year off at 73. She's got a trading range of 66 to 75 for the whole year, basically going sideways. She makes a low of the year back in the end of January at 65, the high of the year at 80, right in the beginning of June. Okay, right now she's at 78.90. Still has plenty of room to make up for that 51 cent dividend. So we're going to jump into this one. We got 5 up days in a row. That's good. Walmart's not unheard of continuing to do that. So let's find out where we are. 78.90. So we're looking at the 78.50, which is right here. 38. I like that. Okay. So the reason why we're looking at the 78, 78.50 is because the stock is already at 78.90. So we're 40 cents into the money on this spread, which means as long as the stock stays above 78.50, we're going to make our profit. And it can go all the way down to 78.49 before we have to start thinking about something to do. Okay, so if we do this one, let's get out of there. Do our 50 contracts. Click and send. All right. The most amount of money we can make on this trade. All right, here's the order description. Buy 50 verticals for the 28th of July, 2017, the 78.50 calls at 38 cents. Limit order to open. Whatever. Okay. It's costing us $1,981 or $19.82. Okay, it's called $1,982 to do the trade. And the most I can make is $600. Now, 600 out of 19 is just a little bit under 30%. Okay, so this is our second trade for the day. The first one I just showed you a little while ago was a 25% trade. This one is a 30% trade. We all know who Walmart is. And is it really so bad owning Walmart at 78 bucks? No, it's not. Okay. However, I don't want to own Walmart. I want to make the 30% return on my money. I want to put up 2,000 bucks and get back 600, and hey, there's my 30% return. All right. All right. There's no money in this account, so let's go back to the other account and trade our Walmart. And we want to trade $42,000 worth. So let's go up a calculator. How much is Walmart for WMT? Okay, now I'm going to do this very slowly so you can get it. See how it goes. I'm coming up to the ask. I can go to the bid. I can go to any one of these up here and just right click. Okay, this drop down box opens up and that tells me what I'm going to do next. I'm going to hit the buy custom because I have a lot of saved trades. I'm going to do the top one. I can do the top one, the bottom one, or I can do any one of them because they're all basically the same. The top one, and it automatically fills my order for me. Now what I got to do is I got to find out how many shares am I going to buy. Now, how much is Walmart going for? 70, see it right here? Last traded at 78.90. So let's do 79 bucks. Okay, $42,000. $43,000 at 79 bucks. Okay, let's clear that. 43,000 divide $79. Okay, 544 shares. $544. 544. So we bought 544. We're selling 544. We're looking for a 2.5% profit margin. There we go. 42.91. I don't know if I'm gonna be able to do that one. Okay, so let's try that again. And how many shares was that? 500. Let's do 500 shares. Okay, 500 shares. All right. So we got two orders open, and leaves us with $1,900. There's our two orders right there. Walmart and Schwab. Okay, that's our two orders. All right, so these two new orders we just put in will allow us to play a little bit more. Now, they both have the dividend coming up in 10 days, so we'll see how those go And tomorrow, like I said, we did the 30-day challenge, or we're doing the 30-day challenge, which means we're going to do a video every day for the next 30 days. And if it works out great, hey, we'll continue on doing it. If you're watching this live, great. Let's see if we have any questions. No questions. So let's go back to my trading. Okay, so there's no questions. So, like I said, the 30-day challenge, I'm going to do this video, do a live video every day for the next 30 days. Hopefully, we can get my screen working properly again, other than what we have working. Let's jump on over and take a look here and find out what Colgate did, because we only have one position here because we're just doing so darn well with it. Not really, but all right. We only have one position here. We have 5,000 shares of Colgate Palmolive. She started out the year trading range of 72 to 75, trades for a couple of months there, about 4 months, drops down to a trading range of 64 to 67, trades another 4 months there, and then she jumps up back to the 73, 74 area, which is where she is now. And right now, today she opened up at 71.83. She had a high of 74.50, and she closed at 73. However, we sold someone the option to buy this from us for 74, because we bought it at 74. Right, so we have 5,000 shares at 74. The first week we made, I think it was like a 30% profit off of the spread. Second week, we ended up buying the 5,000 shares, and we did a covered call, which gave us, I think it was like $2,600, which was like a 2% return. The next week, we did the exact same thing, but we didn't make 26. I think we made 2,200 the second week. And then this week, we sold it at 20 cents a share. Oh, also, last week, we collected a 40-cent dividend, which was another $2,000. Okay, so we're up quite a bit with Colgate Palmolive. We keep collecting. We got 2%. Well, actually, we got 4% last week. The week before that, we got 2%. The week before that, we got 2%. And the week before that, we had just purchased it. But this week, we're getting 20 cents times 5,000. So we only got like $1,000 this week. All right, so we only made 1% on this account this week. If it closes above 74, and we make all that money. Excuse me. All right, so that's good to go. And we're going to see you guys again tomorrow to find out what's happening in the market tomorrow, what we're going to do for come Friday, because we're doing the one video a day for the next 30 days. Tomorrow is Thursday, so let's see how everything works out, and we will catch you tomorrow night. So, this is James signing off, and we will catch you tomorrow.